Good morning, traders. This is Michael coming to you from Gamma Edge on Monday, October 13th, 2025, with our pre-market prep session. As always, here at Gamma Edge, we'll cover our three pillars: sentiment, structure, and trend. But I want to talk a few minutes about everything that happened last week and on Friday. We've had a lot of messages, discussions about our tools, asking us if any of our tools here at Gamma Edge could have predicted this sell-off, or just extensive commentary within our community over the weekend about everything that happened on Friday. So just a quick overview. Let's set the record straight. Any service or anybody that in hindsight says they could have predicted this sell-off is probably not being very truthful about what everything was saying with structure and tools. Now, with that being said, we were discussing last week, starting on Wednesday, actually Tuesday, Wednesday. Currently, what we're looking at right now is our market trend model. Our market trend model is based on the tick index. This is selling versus buying in the overall market. Just an overview of what market participants are doing. Are they buying more than selling? And we've talked about our market trend model being really the first pillar that we look at within our overall game plan. And then our overall tools that we use in the morning, our systematic understanding of what the market is doing. You want to be on the right side of the market. That is really about 75% of the battle. So again, on Wednesday of last week, we were already discussing that our market trend model was turning off our mechanical portfolios. For us here at Game Edge, with our extensive back testing, 13 years, 3 years forward testing, just a lot of scenarios we've ran through. When our mechanical portfolios start turning off, it tells us to be cautionary. That was already on Wednesday. That was indicating that market participants were selling more than buying. Now, nobody ever could have predicted what news or what was going to come out on Friday, but the market was already setting themselves up for managing risk or decreasing risk, right, in the overall market via selling, right, underlying selling. So we can scroll back and we can look here on the 7th, and what we go through is on our market trend model is our filtered cumulative tick, plus 1,000, minus 1,000 larger block orders. Thanks everybody for joining us. I'm just doing a quick overview of last week. Again, not in hindsight. You can go back and look at all of our pre-market prep videos. They're all out there on YouTube. And what we were looking at instantaneous and what was going on leading into the days up to Friday. So make sure you review those. Push back on us, give us questions. We'd be happy to dialogue with everybody on the overall internet of what we're looking at. But back to what we're talking about, market trend model. Wednesday, it was already indicating via our filtered cumulative tick and our market trend model on the tick US. We'll look at the ARCX here in a few minutes. We were crossing below our colored ribbon. For us, when the instantaneous bolded white CT crosses below the colored ribbon, this is our longer look back period, we're already starting to get a cautionary stance, right? So we start reducing our long exposure, not necessarily increasing our short exposure. You can if you're an opportunistic trader, as the bolded white CT here, our bolded white cumulative tick was under the moving averages. So again, indicating weakness in the market, and we're moving below the colored ribbon. So again, for us, that's basically a yellow flag waving really bright in our face saying, hey, market participants are selling more than they're buying. Filtered cumulative tick, which are institutions, are selling at a pretty decent clip. So we need to be cautionary. We need to really start pulling back our risk and understanding what's happening. Then continuing on into the 9th, we were trending sideways below the colored ribbon. And then on the 10th, obviously, the 9th, we started moving below the shorter term moving averages. And then on the Friday the 10th, obviously, we had the pullback and the overall sell-off on the market. So nobody, including us, out there in the Twitter sphere, X, whatever, financial, pundits, whatever, could have predicted what was going to happen on Friday. But we had some indications leading up into Friday that there was some caution that we should have been projecting into our overall portfolios and into the market of understanding, right? And we've done this over and over. We've had these multiple cycles, the past 13 years that we reviewed and the past 3 years that we forward tested our portfolios. So for us, we were reducing risk. Mechanical portfolios turned off. We were not taking new longs, and we were being prepared to go short if we needed to, right? So that is what our stance is from Game Edge leading up to this. Now, there was some other tools with the SPX option structure that was indicating that the structure was weakening, right? Our out of the money call speculation was dropping, which we'll go over here in a little bit. Our out of the money put hedging below us, left-hand plane, we talked about this in SPXA and SPXP. Go back and review our pre-market preps. Again, they're all there for everybody to review. Was starting to indicate that there was some put hedging coming into the overall market. Again, not saying we were going to crash, not saying we're going to pull back 2.5%, but market participants were most likely getting a little jittery, right? So they were starting to increase their put hedging. So again, some tools were showing that there was some caution that we should be absorbing within our overall portfolios. Again, not being full portfolio long, reducing risk, and being ready for either a market pullback or just a sideways market action, which unfortunately it came to fruition on Friday if you were 100% portfolio long. Here's our tick RC. This is what we base our mechanical portfolios, our wheel strategy, our P-trans to P-GEX strategy, okay? Once we cross below this red, red above cyan, once we start crossing below the red, it starts producing a negative slope. Our mechanical portfolios turn off. And then when we emerge, I specifically remember myself talking on the 8th that we were within the overall colored ribbon and we were at an inflection point. That was my exact statement. I went back and reviewed my video because I wanted to make sure that I was extremely clear on that day and unambiguous. We were at an inflection point. I said we could move up or we could move down, but we were cautionary with where we were at within the overall structure. We emerged below the colored ribbon. Obviously, this is indicating that more selling is happening in the overall market, and you should be reducing portfolio longs and possibly getting ready to go short if you're an opportunistic trader. So that was what we were looking at moving into Friday. Again, no predictions. We were looking at what was in front of us, what the market was telling us, and what we should be doing as traders to manage risk. And again, above all else, manage risk, right? If you miss the move to the downside, which that's what everybody was commentating about, how could I have known? How could I have had puts? How could I have been hedged more for the downside? Nobody knew that this was coming. All we did was have indications that a possible pullback was in progress or getting ready to happen. So be prepared for it, right? And again, if you missed the move to the downside, but you protected your capital long and managed your risk, then you did everything correctly with what was supposed to happen, with how we produce our content and how we tell our members to be positioned within the overall market. You reduced your drawdown, you reduced your risk, you reduced your hit to your portfolio via your negative P&L, and that's all you could do. Now, could you have caught the downside with puts intraday via 0DT, via some of our tools? After the move started happening, yes, there was indicating there was a significant amount of 0DT puts coming into the overall market. And yes, you probably could have caught some of the move to the downside. But if that is not your style of trading, then don't worry about it, right? If you manage risk heading into Friday, you went home on the weekend and didn't take a large hit to your portfolio, and you had a great weekend and slept well, then that is your number one goal. And that's our number one goal here at Game Edge, is to help our members and the community manage risk and protect your portfolio and reduce your drawdown. If you can reduce your drawdown, then your P&L curve will flatten out. It will be much more linear from lower left to upper right, and that's the whole goal. We don't want it to look like a roller coaster. We want it to look like a steady climb up a mountain. And there's going to be peaks and valleys. It's going to happen. It's what the market does. But we want to reduce those valleys and increase those peaks. And if we can drop those valleys down to, 0.5% to 1%, but then increase those peaks 3 and 4% when we get those moves back to the upside, when the structure is conducive of a move up to the upside, as well as the market trend model, that's all we can do within the overall market. So anyway, hopefully that helps everybody understand how we were looking at the market. Again, go back and review our content, post questions, be happy to interact with the community. But this is what our market trend model was telling us heading into Friday. It wasn't telling us that we were going to sell off 2.5%. It was telling us that we were needed to be cautionary and reduce risk. So hopefully that's clear for everybody. If not, everybody joining us, ask questions. I'm going to be here at least until probably 9:30 until the open after I go through everything. So let's move on to the SPX, right? This is our options market. SPX, most liquid. This is what we look at. We talked about some of the put hedging that was coming into the downside. It wasn't significant in the SPXA, but now obviously we've increased that overall put hedging. In the money puts above us, out of the money puts below us. We're put dominated, right? So understanding that, and our transition is extremely wide, but our positive trends level has not changed, which is very interesting on the SPXA. So if this transition level does not change, obviously we need to get back above 6,700. But if that transition level, does not continue to drop, then that tells us that SPXA large institutional market participants are not necessarily dropping their overall positioning extremely to the downside. So it's really going to be crucial and key to watch what happens with the transition. We're heading into an expiry this at the end of the month, or the monthly expiry. So it's also going to be interesting to see where this money gets positioned right after this expiry. Again, that will let us know what's going to happen for the rest of the month and maybe positioning into November and on out into Q4. So we're going to continue to watch that. So transitions wide. Obviously, we already know that it's going to be key to get back above 6,700. So we'll watch that. But we're put dominated as of now via the overall structure. So we'll watch that. All right, let's move on to the SPXP. SPXA is your cruise ship. Larger institutions, they steer everything. SPXP is our speedboats, and this is what is our 0 DTE, as you'll notice over here, as well as our individual daily, weekly, quarterly, or weekly expiries that we can add here. So 13th, we have 21% of the GEX coming off today, which is Monday, right? So where that gets positioned for the rest of the week may drive the bus of what's happening, right? And then obviously we have monthly expire. So completely red, net delta. Go back and review our previous charts. We were completely green, and then we saw some put hedging. We saw some out of the money speculation start to drop. And then now we're completely put dominated above and below spot price. So where are we at? We'll look at the full complex we have on right now, and then we'll go to 0 DT. Implied open 66.25. We see the GEX DEX transition extremely far above us. So 66.50 is going to be that first key area. We're talking about 40.50. We'll look at it overlaid on the 0 DT as we have a confluence of full expiry, GEX transition, and 0 DT transition. So we'll look at that in a few minutes. Obviously, getting above these transition levels, we pound this into the ground is key for moving into a more positive, call-dominated, positive gamma state. Now, where we're at within this overall transition is fairly negative, put dominated. So you're going to have a significant move above transition, and via our vol M or our intraday vol metrics, we're going to have to see a lot. That's a technical term of out of the money calls coming into the complex. That's out of the money calls above spot price speculation of market participants. And then we need to see some of these in the money puts obviously start closing again via the intraday vol metrics. We don't know if they're opening or closing, but we can make a few assumptions of where the transactions are transacting via the volume, right? So we'll continue to watch that. So key takeaway is we're below transition, which is bearish. We're put dominated, which is also bearish, and we're going to have to see this structure really repair itself to have a significant move to the upside. I know we're bouncing already pre-market. We bounced overnight, but the structure is still put dominated and very negative gamma. So a move to the upside is going to be difficult unless we see these key things change. Market trend models start moving back to the upside. Out of the money calls start coming in, moving back above transition. So what we want to do is if you're a bull, you want to put some fear into these in the money put holders, which are above spot price, and then they start to close. So then you start the snowball of in the money puts closing, out of the money calls coming into the complex. So you're reducing your negative delta via the puts. You're adding positive delta via the calls. Market makers have to hedge. They have to buy to hedge the positive delta coming in, the negative delta being removed, and then that can help us move to the upside. So key metrics that we need to watch. All right, let's move on to the SPXP GEX ratio. So this is a gamma edge ratio. This is basically like a put call ratio, but it's looking at short dated call gamma versus short dated put gamma. As you would expect, significant amount of short dated call gamma was removed from the overall complex. Significant amount of short dated put gamma entered the complex. So this should drop your ratio pretty significantly. Obviously, large bar, as you can tell. This is a SPX spot price. So we hit that key lower level of 0.5. Now, historically, when we hit 0.5, less than 0.6, that can be an extreme within this overall ratio, and we usually see a bounce. So you could scroll back to multiple presentations where I actually put a green line down here along the put 5 or 0.5 area, and I put a red line up here around the 1.8 to 2.2 area, which was an extreme. And then usually we'd see some sort of pullback at 1.8 to 2.2, and then we see some bounce around 0.5. So we're not saying that's what's going to happen, but we did reach an extreme, and now we see a slight positive slope heading into today. So we'll watch this. If there was going to be a bounce area, this would most likely be a bounce area unless we're going to have a significant move to the downside within the overall market, and then you'd see this ratio continue to drop. So how do we use this ratio heading into today? If SPX moves up today, we want to watch this GEX ratio, and it needs to conversely move up also, indicating short-dated put gamma leaving the structure and complex, short-dated call gamma coming in. Now, your put-call ratio, you're going to see a ton of posts this weekend about the blow-up in options, put-call ratio off the chart. The problem is that doesn't add a time component, right? If you're a short-dated swing 0DT trader, you want to know short-dated positioning, what's happening, and that's why we add a gamma component to this. We want to know the short-dated call gamma versus short-dated put gamma. I could care less what's happening 45 days down the road if I'm a swing trader on my put-call ratio, right? Yeah, puts might be outpacing calls, but that doesn't give you what is happening today and what's going to be happening in the next few days, and that's what our SPXP GEX ratio does. Again, we've had extensive education about it, why this GEX ratio is better than a put-call ratio. Check our blog out, gameedge.us, as well as our significant post on x.com. All right, moving on to the delta balance. We've got a lot of stuff to cover today, so that's why I went through my monologue earlier, and then we're moving through this now. So delta balance, this is telling us what's happening in the left-hand plane and right-hand plane, above and below spot price, with structure and positioning. Obviously, the red is the left-hand plane. Okay, so that would be your out-of-the-money puts as well as in-the-money calls. We're below zero, so that's indicating that put speculators are in control. Right-hand plane, this is your out-of-the-money call speculation or your in-the-money puts. Again, way below zero, so indicating put speculators are in control. We talked about that with our web app. Put dominated, right? Put speculators are in control above and below spot price. And then your delta balance is down at -1. Again, indicating put speculation, bears are in control. Now we see this projection on out in time. This is our future expiries on our delta balance with positioning. The 14th, the 15th, and the 16th, it maintains a -1 delta balance. So that's indicating that we could see more market weakness as bears are maintaining control and put speculators. Then after the 16th, heading into the monthly OPEX, we see a possible reprieve on the downside or the downside speculation or put holding control of the overall market. Again, this is not saying that's what's going to happen. So if you're looking to go long the market, I would be holding off until we see three things change. Market trend model starts moving back to the upside. The SPX GEX ratio starts increasing, indicating short-dated call gamma is going into the overall market. Our intraday volume metrics indicating call speculators are coming in. So I guess four things. And then the delta balance continues to move back to the upside, indicating call speculators are returning to the overall market. So those are the things we'll be watching day over day. All right, SPXP net stack command, high sensitivity levels. As you would expect, in the money puts dominating in the right-hand plane. We do have in the money calls here just below us, but 65, 75 significantly down below, but really inconsequential because you see it's almost 10x in the right-hand plane in the money puts above us. So that's the dominating complex overall. And then the charm, again, headwind, significant in the money puts, and then below us out of the money puts, if we stay above 65.50, could possibly be supportive. That's why I talked about my X post this morning, a pullback to 65.50. All right, let's move on to 0DT structure. I didn't do the fancy drawing today as of the structure is completely broken and messy, and our transition areas are just blown out and extremely wide due to uncertainty and positioning in the overall market, as well as our drunken sailor range. So key points and takeaways today. 66.40. You see our transition area there. That's the GEX transition. At the very least, if you're looking for a move to the upside, that is the first level you need to get over. The problem is then we're stuck within the drunken sailor range, and you're also in the DEX transition. So again, this is going to be just a mess, extremely choppy, directionally wise. Just be patient and let's let the structure kind of weed itself out. Obviously, we're going to have a significant amount of market on open orders from people on Friday that looked at their overall portfolio over the weekend, and they're just throwing in market on open orders either to open or close. So first 30 minutes, I have a feeling it's going to be highly volatile price action, just back and forth. It's going to be very emotional, right? That's what happens in the market when you get a significant move to the downside. Emotion takes over. Everybody throws out the rules and they just start punching buttons. That's not what we want to do. What we want to do here at Game Edge, as well as anybody that has followed us for an extensive amount of time, be patient. Wait at least 30 minutes before you do anything, right? That should be your number one rule this morning, okay? Then let's get some data in. Let's see where our intraday volume metrics are at. Let's see how they're positioning. Are they positioning more for the downside? Are they positioning more for the upside? Let's look at where our key gamma delta levels are at and how we're interacting with those levels. And then the possibility of a trade may set up. For me, on days like this, after a large market sell-off, it's really not a 0DT trading day for me. I rarely do any 0DT trades just because I want to have defined risk-reward areas where I can take trades. And with this market structure, the way it is now, heading into this morning, there's really no defined areas for me. Yes, I could take a long above 66.40, but we're in a put-dominated environment. You're in an overall DEX transition that's extremely wide, and you're within drunken sailor range. So I have three things working against me for one positive of moving above 66.40. Really not a good defined risk-reward because we're really in the middle of no man's land. So where would I set my risk level at, right? There's nothing really close that I could set my risk level. Yeah, we move above 66.40. I take a long. Okay, if we move back below, I'm out. But the volatility that we're going to have at the open could just bounce back and forth between 66.30, 66.10, 66.40 for the first hour, just back and forth. And you're just completely chopped up, trying to go long, trying to go short. So just patience. Let's get some defined levels in place. Let's see where market participants are placing bets via our intraday volume commands that we have here at Game Edge. Come join us, gameedge.us, 14-day free trial, all the tools turned on. Our team will be in the room today helping traders decipher the data and make decisions. If there's a day that you should come join us at Game Edge US, it should be today because we can talk through this morning and get an overall understanding of what's happening with our tools. So for me today, again, moving in, I know this is not what everybody wants to hear, but for me, it's not going to be any trades at the open. It may likely not be any trades all day. But I'm just going to be looking at the structure. Let's see how it plays out. Let's see how it repairs itself. And let's see what happens for the rest of the day. Pull back to 65.50 is definitely within the realm of possibilities. If we get below 66.10, which is a transition area, we could see more risk off, especially if market participants are positioning to the downside and speculating for out of the money puts via our intraday volume metrics. So hopefully that helps. If anybody has any questions, we've had 122 people jump on, views off and on. I definitely appreciate everybody joining us. Again, I did a short section at the beginning of this that was going through our market trend model and what we were looking at next week. Again, it was not hindsight, just saying what we were looking at on Wednesday heading into Friday. Again, nobody could have predicted what was going to happen on Friday. Yes, the structure was weakening. Yes, the market trend model was telling us to be cautious. But again, if anybody out there tells you they could have predicted what's happening on Friday, I encourage you to push back on them. If you're a member of their community, including us, come into our community, push back, help us understand it. Like, we are a member-driven community. We want our team to be profitable, and our team includes all of our members. And if there's something we can do different, something we can convey different, we'll do it, and we'll change it to help people understand what's happening. As always, thanks. It's just Jim. Yeah, we can look at Qs. Let's go ahead and take a look at those. All right, so QQQ, put dominated, obviously. So all these ETFs are most likely going to be put dominated as you move down the overall structure. So again, wide transition area. I don't know where. Let me look at our projected open for Qs. So projected opens at 600. So we're going to open right where spot price is, right here. So it's a COI. So again, for the full expiry, PGX is up at 610, but you're within the overall transition. Just a hodgepodge of what's going on. So let's look at 0DTE. PGX COI 600. So again, already for the pre-market data, it's indicating that we're probably not going to have a significant move to the upside unless we see a lot of out of the money call speculation via our intraday volume commands. Now, our volume and vol D commands do cover SPY, Q, IWM, SPX, and individual equities if you want to look at those. But yeah, so we're going to have to watch this after the open to see if we see market participants speculating up at 603, possibly 605. Again, this says it's call dominated, right? But and the net gex is here, so we have a significant amount of in the money calls below us, right? So that can be supportive on pullback. I know Qs have really been kind of outperforming the overall market. So I would love to watch this at the open and see how the structure changes throughout the day here as we navigate this overall structure. But now, so Qs obviously look better than what everything else is. So we'll see how that plays out. So yeah. So. All right. Anything else anybody wants to go over? Be happy to hang out for a few more minutes. Again, thanks everybody for joining us. Check us out, gammaedge.us. Oh, gold. Yeah, gold's making all-time highs, right, Jane? Yeah, we'll check gold. Gammaedge.us, newsletters. Put in your email here. You'll be delivered our Beyond the Bell newsletter on the weekend. Free courses, GammaEdge FastPass. This covers all of our thesis, all of our tools that we use here at GammaEdge. It's free. I encourage you to look at that before you come join us if you want. And then click on the pricing tab. Come join us in the Discord. 14-day free trial. All the tools turn on. So I may have to look at GLD. We'll look at GLD too. So call dominated, all expiries, 20 to the upside, peak X COI. So we need to update the Greeks here. That is not updated. Let me look at GLD. Our Greeks on gold is not updated. Okay, let's look at GLD. I'd rather look at GLD. OI is significantly more than actually GOLD. So here we go. Call dominated above and below spot price. Let me look at all the expiries. So PGX and CRI are actually below spot price, even though we're moving up significantly. So upside speculation, at least on that aspect, is probably waning a little bit. Let me look at the 13th. So 377 is PGX. COI is 380. Let's look at the Wednesday expiry. 375. Monthly expiry 370 drops. After monthly expiry 367. So we do see the structure drop after this coming monthly expiry. So I might want to be careful with that for a move to the upside. 377 to 380 looks like a cap on price for GLD. And then the structure does drop after the next expiry. So out of the money speculation looks to be dropping after this expiry. Now that could change, obviously, with everything that's happening. But that's how I would look at it at the moment. 370, 377 to 380 cap on price for this week, most likely. And then we see the structure drop. So we may not see a significant price appreciation after this expiry. So hopefully that helps. All right. Thank you, everybody, for joining us. Again, if you caught us late, go back and review the beginning of this. I talked about our market trend model. I talked about a lot of tools that we were looking at heading into Friday that were just giving us some yellow flags. Again, not saying that the market was going to sell off. So again, join us, gammaedge.us. Like and subscribe on X as well as YouTube. You'll be notified when we go live with content. Possible midday review recap today of price action. And then our post-market recap also. Again, all of our stuff's on YouTube. Go back and review our previous videos leading into this week, as well as all of our other significant education content that is all free. All right, everybody make it a great day. Stay safe, manage risk, and we'll see you later.